excited to be here with CU Members Mortgage's very own Sue Nash for this month's Mortgage Monthly, brought to you by the fine folks at CU Members Mortgage. And Sue, it's so great that you're here. I'm so happy that we figured out all the technical stuff and we get to talk a little FHA today. How's that?
Sounds great. I'm ready.
Yeah. Me too. All right. Hey, but before we get to that, tell us a little bit about yourself. Share with us about your career and what you're doing for CU Members Mortgage right now.
Yeah. So I've worked for CU Members Mortgage for about 10 years now as their loan officer manager, but I've actually worked with credit unions my entire career. So I started at a credit union as a teller many years ago and worked my way up. So essentially, I've worked in credit unions for 40 years, and I have to tell you, I started when I was really young. But it's been a wonderful experience. I've met some amazing people and lifelong friends along the way.
Yeah. There's so many great stories like that there's like credit union lifers, as we call them, and you're definitely one of them. And we couldn't be happier to have you in the industry doing the work that you do day in and day out, especially on the mortgage side of things. And you are definitely an expert for sure. So let's get to today's topic. So what's new with FHA and why it's still a viable product for credit unions to compete? So can you tell me, Sue, a little bit about why this product is so important for credit unions today?
Yeah. So the popularity of FHA has come and gone over the years.
Mm-hmm.
In recent years, Fannie and Freddie created a conventional product that competes quite well with FHA. But I think it's important to understand that FHA is still an important product to offer.
Yep.
And one you don't want to dismiss.
Oh, certainly. And that's so good to know, because so why is it so important to offer this product if you have other conventional products available?
Yeah, so Fannie and Freddie both offer conventional products with a 3% down payment, but FHA has some flexibility that these programs don't. They're less stringent in credit qualifying requirements when compared to conventional.
Mm-hmm.
The credit scores can be much lower than what Fannie and Freddie will approve. And the monthly MIP, which is FHA's version of PMI, could be considerably less.
Oh, interesting. Good to know. So what's the minimum credit score allowed by FHA? This is kind of an important one right now, I would think.
Yeah. So the minimum credit score to qualify for 3.5% down is 580. But many lenders will decide what their allowable minimum score is. Many have it set at 620. We can go as low as 600. In addition, if the borrower could put 10% down, the guidelines say they can have a credit score as low as 500.
Oh my God!
But again, I think lenders are going to determine what their risk level is.
Yeah. Wow, those are amazing numbers. So what about, you mentioned PMI earlier? What about mortgage insurance, or MIP as you referred it to? So how is that different?
For FHA, the member is going to pay an upfront premium for mortgage insurance, which is added to their loan amount. In addition, they will pay monthly insurance premiums for the life of the loan, unless the LTV is less than or equal to 90%, and then they'll only pay it for 11 years. So the upfront premium is 1.75% of the base loan amount, which is added to their initial principal balance. The monthly premium amount is determined by loan amount and term. The premiums are more when the loan amounts exceed $625,500. And if the term is greater than 15 years. So
Gotcha.
Let's say we take an FHA loan and compare it to conventional.
Right.
Both are the minimum down payment. The FHA monthly premium would always remain the same no matter what the credit score is. So for a $250,000 loan, the monthly premium would be $177.
Oh, okay.
Yeah, for a conventional loan with a 680 credit score,
right,
the premium would be $250. And when we drop down to a 660 score, the premium would be over $340 a month.
Gotcha.
So almost
these things.
Yeah. Almost double the FHA amount. So, those are big savings, even if the member could qualify for conventional. Is it the best product? Not always.
Yeah.
So we had a young lady a few months ago, she applied for conventional and her score was low. So the mortgage insurance monthly was really high because of that.
Right.
So our loan officer explained to her the difference between FHA and conventional, what it would do to her payments, as well as the fact that the FHA premium would be for the life of the loan, which is different. And then once the member had all the information, she was able to make her own informed decision.
Excellent, excellent. And so what about the market we've been in? It's definitely been a seller's market, right? So we've seen this past couple of years. What's going on right now?
So I definitely think sellers think government loans mean a borrower is more risky or credit challenged.
Yeah.
But sometimes FHA just makes more sense. I also think as we move slowly out of the seller's market, FHA borrowers are going to be more common. In addition, if an FHA borrower could get pre-approved, then that letter will have the sellers looking favorably at that borrower.
Yes. Yeah. That's the key word, that pre-approval. So I highly recommend anybody out there shopping for a car or a home, get pre-approved. That gives you a lot of leverage for sure. So,
Yes.
so can these borrowers, can they have a co-signer?
Yeah, so a non-occupying co-borrower is allowed. They have to be related by blood, marriage, or law. And they can't have a financial interest in the transaction. So they can't be the seller, the builder, the real estate agent. But in most instances, honestly, we see it's a parent co-signing for a child.
Yeah. Like a first-time buyer, that type of
Right.
thing. So yeah,
Right.
definitely. That's where mom and dad come in handy.
Yeah, they do sometimes. Yeah.
Sometimes, yes. Let's talk about funds for closing. So is there anything different there for FHA as well?
So there is a little difference. They can do seller paid fees up to 6% of the sales price, whereas conventional only allows a 3%, with the maximum financing. They can do lender paid closing costs, but that will come with a higher interest rate. Gift funds are also allowed from an acceptable donor. And then many cities and counties have low income down payment assistance programs. And for some members, this can be helpful. Now, not all lenders will work with these assistance programs. Plus, they can complicate the process and could make the loan take a little longer.
Yeah. Is there anything else that would benefit that would be a benefit? If I can get the question out, that would be a huge benefit here. So, is there anything else that would be a benefit in going with a FHA?
So bankruptcies and foreclosures are both handled a little differently with FHA. In general, FHA offers more lenient guidelines for those members with that bankruptcy or foreclosure in their history. If you have FHA as an option, it could give members that additional option for financing. And if there's anyone out there that's interested in exactly how this works, feel free to reach out to me and I'm happy to get into the details. But foreclosures can definitely be a time where FHA sometimes just makes more sense.
Yeah.
Foreclosures happen. We had a member that was divorced. He and his ex-wife had gone through a foreclosure when they were married.
Yeah.
And he worked really hard afterwards to reestablish credit, save for a down payment. But when he applied for conventional. And the foreclosure had taken place in 2018. So for a conventional loan, he'd have to wait 7 years.
Oh, that's right.
But we were able to save it by moving him into an FHA loan since their waiting period's 3 years.
Yeah.
So this is an alternative, you wouldn't have if you didn't have FHA in your toolbox.
Right. So it worked out for this gentleman. So yeah, that's good news. There's options, definitely options. Yeah. So right. So you definitely convinced me that FHA is a product worth offering to members, even if you have that nice 97% product available through Fannie and Freddie. So is it easy for credit unions to offer FHA? Are there any hurdles here for them?
So yes and no. So credit unions have two options.
Okay.
So one option is they can go through the HUD approval process, which is long and complicated. And I have to tell you, most credit unions that start down this road quickly see it's much more than they're willing to endure to become HUD approved.
Okay.
You have to basically prove to HUD that you have the expertise to do these loans before you even get started.
Yeah.
So we find many credit unions they feel defeated trying to get through the process, and it's just not easy. But they don't have to leave this gap in their product menu. So credit unions can offer FHA loans as a third-party originator in cooperation with a direct endorsed lender. So this will allow the credit union to participate in the origination process and ensure a positive experience for their member. And it keeps them from going down the street to get their financing.
Yep.
So another nice part of having that direct endorsed lender is if you have a loan that has a few characteristics that's keeping it from getting approved as conventional, You can call or email your lender and see if it's something that could go FHA.
Yeah, yet another reason to keep your members in-house, so to speak, or in your ecosystem, right? So yeah.
Right.
Just another tool in the toolbox. So this is this is a great option for credit unions, and I can see that the gap that's there if they just skip it and don't offer it at all. So is it really a must for credit unions to make sure they have someone to work with on FHA loans? Or let's put it this way. So how does a credit union go about working with CU Members Mortgage on offering FHA loans here? So get two sides.
So I'm glad you asked. I mean, credit unions that are interested in learning more about FHA loans can contact our team to answer any questions. You can go to our website at cumembers.com or just give us a call, or you can reach out to me directly at sue.nash@homeloancu.com as well, and I'll be happy to help you.
Good deal. Well, we'll put all those links in the show notes so people can get right to you, because I think there's going to be a lot of interest for this in the environment that we're in right now. So I think these will be very popular. So anything else to add, Sue? I mean, this is fantastic stuff here. I mean, again, great to have options, right?
Right. Always got to have options. And no, I really don't have anything else, but it's been really a pleasure to talk to you today. So,
well, thank you. Likewise, Sue. I love talking to folks who are just have a wealth of knowledge, and you definitely fit the bill there. And I'm learning about all this type of stuff in the mortgage lending industry, FHA's included. So it's always a good thing for sure. And like we said earlier, it's always great to have options, especially for credit unions in the lending environment. So good stuff. All right, and I want to thank you all out there for watching today, and Sue as well. If you missed any portion of this broadcast, we will be posting a recording a little bit later for you guys to watch on demand. You can watch it over the weekend or what have you. So and again, if you have any questions, we're going to put all the information, all the contact information in the show notes. So Sue will be most happily to take your call or email to talk about FHA for you, or anything else for that matter. So good stuff. And on that note, you guys stay tuned for next month. We're going to have yet another Mortgage Monthly talking about another timely mortgage lending topic here for you all to learn from and keep this great movement going forward and getting some folks into houses too. So really exciting stuff here. So on that note, thank you so much for watching, and we'll see you next month.